Stocks on Wall Street rebounding sharply Wednesday afternoon on Joe Biden's sudden surge on Super Tuesday. Right now, the S&P 500 up over 3%. Well, amid all these wild swings, where does the market go from here? Let's ask Mark Newton of Newton Advisors. He always studies the charts. Mark, so we're in a new month. Will we retest the lows that we just hit on Friday, or do you see over the near term enough to extend the rebound that we got on Monday and yet again today?
I think both answers are yes. I think we can extend the rebound in the near term, but there is a chance that we can certainly pull back and test the lows. Quite a bit of damage was done on the recent pullback, 12% in a very short period of time. And so we are seeing a nice rebound, and there were some factors to support that, being overly pessimistic sentiment and very oversold conditions. And now on this rebound, we're actually seeing some decent strength out of technology, which is a positive. But you know, a lot of the cycles have started to show a great bit more volatility of late, and I think that's going to be something that stays with us for some time.
So when you say the cycles are showing more volatility, I know you look at the charts, you also look at sentiment among other things. What do you see over, I guess, the next month or two in terms of trading?
So I think the market can in fact push up into the month of April. Historically, once we start April, May, we get into a very seasonally negative time between April and October, and specifically because the first 2 months of the year were down. Looking back over the last 70 years, when both January and February tend to be negative, it's happened 10 to 11 times, and each time since 1950, the market's been down for the year. So I'm really heightened alert of the chance for a down market for this year, but you know, I've really begun to play very tactically, very shorter term, only because the volatility has grown so intense. So, you know, a lot of my factors, my studies suggested that markets can in fact push up from here, and at least in the near term, but I would actually look to probably lighten up as you enter the month of April, and thinking that you know, regardless of whether there's uncertainty about coronavirus and it spreads, there certainly won't be a vaccine for some time. But just technically speaking, going from rampant oversold to overbought levels for me, whereas the broader momentum has started to grow more and more negative, that's a concern. So near-term overbought conditions, while momentum has turned down sharply, would normally be something to sell into as you approach the spring months.
I see. So you're sort of negative for the year, given what you saw as a pattern over 11 years when the S&P was down for the first 2 months of the year. What is your line in the sand, or rather, what levels are the ones that you're watching right now? Which points that if it goes below that?
Well, I think in the near term, 2940 on the S&P is important, but really, if you look back over the last year, there's a level from really 2650 to 2750 that marked 4 prior lows all last year. So getting down under that would certainly be a very big concern that we're going to start to really turn down pretty substantially. So you know, my thinking is that you know, there's been a lot of damage. It's caused a lot of you know, sentiment to get very, very pessimistic, in a very short period of time. We had seen a lot of defensive trading that started in January, February that was a really big warning for investors. And so for investors that were looking at the markets moving to new highs every day, you know, you simply look at what's moving, and a lot of those were utilities and REITs, and when those started to outperform technology, that's a real warning signal. You also started to see a huge concentration of really the largest stocks within the S&P and a lot of these other sectors. And so you had 5 stocks that are, you know, in the $1 trillion club that really made up about 19% of the S&P. So that's a concern. And when you see the broader based indices like the value line, for example, on an equal weighted basis, it's equal weighted, you know, 1,600 stocks, that didn't move to new highs in February, whereas the S&P and the NASDAQ did. That was also a red flag, like something's not happening here. And we've known that you know, small caps and mid caps have dramatically underperformed. And from a style perspective, it's really all been large cap growth that's worked in recent years. So for me, it's a concern when you see more and more of the market that's really not participating. And that was very specific back in February that gave a warning signal. Now, it's going to be important that we see a lot of good breadth and participation to the upside on any rally. And really the lack thereof would give me a warning that markets could certainly turn down.
And say possibly lighten up as we go into April. All right.
That's correct.
Thanks a lot, Mark, for your thoughts.
My pleasure.
Our thanks to Mark Newton of Newton Advisors. I'm Fred Katayama, and this is Reuters.